Well, hello. We are precisely at 1 o'clock as we suggested. Our 1 o'clock webinar is now live. Happy Wednesday to you all. I want to begin by welcoming all of you to the second part of our 5-part webinar series. I'm Paul Klassen, and I'll be your host today. So once again, welcome. Looking forward to all of the panelists that are on board here today. So anyway, jumping right into a quick introduction, I also want to welcome all of our panelists today. If they could just unmute themselves and jump on as I announce them. We have today an amazing lineup. We have Tanya from Axoim Mortgage. Hello, Tanya.
Hi.
Hello, hello. We have Rob from Coldwell Banker Mountain Central.
Hi, Paul. How you doing?
Doing great. Just give us your video, you guys. We have Laura from Bank of Montreal. Hello, Laura. Just grab your videos if you can give us your videos, everyone. And then Norm from Norm Toy Financial. Hello, Norm.
Good afternoon, Paul.
And then we have Kathy from Phase One Design.
Hi,
Hello,
everybody.
Kathy.
Hello.
All right. Norm, we just need your video. And we're good to go. I think we're all on. Wow, we pulled it off. I want to welcome all of you that are joining us today. I see we had a few people that joined us from our first session last week. So every Wednesday for the next 5 sessions. We've got 5 sessions going on here. So great to have you all join us. And again, my name is Paul Klassen. I'm just going to jump right in here today. So really quick, before we get started, if you watch the video on our webinar invitation, you already know that my childhood heroes were my grandparents for a variety of reasons. But then to see later in life, first my grandfather, then my grandmother suffer from Alzheimer's. I believe one had Alzheimer's, one had Parkinson's. And just see the level of care requirement, it just really impacted me. It was devastating to see their complete loss of mobility. And then decades later, a little bit of my backstory, 2 of my nephews suffered debilitating illnesses, one with MD, the other with ALS. And again, I saw their suffering and their complete loss of mobility. Saw the caregiver needs of my family in retrofitting their homes for the best possible quality of life that they could provide their kids. But it was that became kind of the impetus of why we're here today. Those childhood and adult experiences really shaped how, after 25 years in the upscale renovation market here in Calgary, we launched Accessible Renovations via MyLifetimeHome back in February of 2020. So that's the backstory as to why we're here today and why we began in February to educate on this topic via panel of experts seminar just prior to COVID. In fact, it was Valentine's Eve in February, where we had a packed out audience in the Tribal Community Center. The engagement that night was great. The interest in the topic was fantastic. There were just a lot of people from every age demographic. So as we all know, within a month of February, Valentine's Day, COVID-19 hit. And soon after, news surrounding outcomes of COVID at various care centers surfaced. And we just realized that this topic needed a serious discussion, a really deep dive with that same panel of experts that we brought in back in February to provide all of you education and options. Here we are for a second of our 5-part webinar series to hopefully provide you and your family with objective education on your options. And we really, really stress the idea here today is to simply provide you education. We encourage you to invite your friends as we start this webinar number 2 with all of our panelists. We've got just an incredible lineup today. On today's webinar, we'll be covering a cross-section of finance options should you or a loved one need some help and some solutions to help in helping transform your home or your loved one's forever home. The solutions we'll be covering today are not your typical banker's solution. We'll cover much more than just financing a home makeover. Some of you may or may not have heard of the solutions we're going to offer today from a panel of experts, but I can tell you that the knowledge and industry information from our panelists today is absolutely outstanding. I've known these folks for many, many years. We're offering a broad range, as you all know, a broad range of topics in this webinar series, all designed to help you choose both where you live and the quality of life you live as you age gracefully. So that's kind of my starting point in today's webinar. Just as a quick housekeeping note, do please type your questions into the chat line. We'll do our best to answer them after today's seminar. If we can't answer during due to timelines, we'll certainly arrange a private Zoom call with you as well. The other thing is, wave your hand. There's a little chat button there. You can grab the icon, raise your hand if you want to ask any of these panelists a question. These are pros, and we're pretty excited. I'm really excited to have all of these folks with us today. Last but not least on the housekeeping item, hot off the press, if you are joining us for the first time, we have a free ebook gift for all of you at the end of today's session. So make sure you claim that ebook. It's a renovation cost guide on accessible makeovers, but also the pros and cons of staying in your home versus moving to a villa or senior care home. And I'll just tell you, I'm super excited about the quality of this book. We had everybody on this webinar, all the panelists contribute to the content of that book. And I just feel it's just going to be a great product for all of you just to get educated again, and a great resource to refer back to after today. So let's get started. We are, drum roll please, as I mentioned earlier, joining us on today's webinar, we have Tanya from Axoim Mortgage, Rob from Coldwell Banker Central, Laura from Bank of Montreal, Norm from Norm Toy Financial, and Kathy from Phase One Design. Once again, welcome to all of you amazing people.
Thank you.
Thank you.
Everybody don't talk at the same time, right?
I know, right?
This is cool. This is Zoom. We're so excited to have all of you there. I'm gonna jump right into our first panelist, and I am gonna banter a little bit today. Try to keep this at 45 minutes, but I will tell you that today's topic is so in-depth and so intense. We may have to go slightly over time. If we do, we will be recording this for a later session, so you will be able to get access to this. There is so much information, so much powerful information for today's session. I just don't want to limit these professionals from giving us the best education possible. So here we go. We're going to start with Rob from Coldwell Banker Center. Thanks again today for joining us today, Rob.
I'm so excited to be here.
Fantastic. I know that the COVID thing has certainly brought a lot of attention to a lot of things, but you're seeing and hearing how now more than ever, retirees and those living with disabilities are looking for ways to remain independent in their home versus potentially a villa or senior care center. But there are concerns, Rob, as a realtor, people are always concerned about resale value. And I'd just really like to tackle that with you today, that whole accessible home element. Can you shed some light on that concern, Rob? Are homes that have been renovated to meet mobility requirements really harder to sell?
They are not, actually, and this is where some of the confusion lies. Is that when lenders lend money on homes and they send appraisers out, they just simply look at similar homes in the neighborhood and try to establish a value based on that. They don't always quite understand that there are a very high amount of people that in Calgary that have mobility issues that are looking specifically for homes that are made to retrofit for mobility situations that are difficult. So these homes actually are, they sell at a premium as a result.
Wow. That's interesting, Rob, because I know the stat right now is 1 in 5. So that's 20% of Canadians register as having a mobility issue of some sort across Canada. That's just a massive number. I don't think people are aware of that number, but thanks for that. Just shedding some light on that. And are there, in your mind as a realtor, kind of all the quadrants and pockets of the city here, are there specific communities, Rob, that might be better to renovate in?
Well, the more older established communities are more attractive. Simply, number one, there's a lot more bungalows in those areas, and bungalows are the easiest to retrofit. If we go into newer developments, there's just a massive amount of two-stories, so in a very limited amount of bungalows. And not to mention in the older established neighborhoods, all of the amenities are very close by, which is very attractive for people.
Good point. Good point. I'm actually going to just quickly jump over to Kathy, because Kathy, I know as in the architectural world, you are building or you're designing in every pocket, and of course acreages as well. But would you mind just adding to what Rob just mentioned? Any specific areas that you've seen? As Rob said, the bungalow rich areas obviously are probably the key.
Yeah, absolutely. And I actually agree with everything Rob just said. And to be honest, it's a really personal question too. And I don't think there's like a one size fits all answer. I would say that, you know, from a design perspective, really just instead of looking at specific communities per se, just make sure that you love your location and consider your lifestyle needs. So for example, you might want to be close to your family that lives in a specific location or specific amenities. And obviously that's going to mean something different to everybody. And kind of like to Rob's point a little bit, in terms of like the actual physical house itself, a couple things to look for. Make sure that the square footage that the house has will suffice for whatever it is you want to do from a renovation standpoint. And then the second thing is structural integrity. I'm not going to dive into it too much today. We actually did an entire webinar last week about this exact topic. So I think maybe what we'll do, I'll just share that in the chat. So if anybody wants to go and reference that in more of a deep dive format, then they can actually go reference that. But yeah, I support everything Rob says.
Yeah, good point. I know we talk about the Brentwoods of the world, the Haysboroughs, Acadia, some of those pockets that are rich in bungalows. And as we all know, they're easiest to retrofit for aging in place initiatives. That said, last week we did, as you mentioned, Kathy, talk about viability of various home structures. So all of you can reference that once we get that on the YouTube channel. Thanks for that, Kathy. I just want to just say, you know, if you think about this whole topic, Rob, is it usually better to stay, do you think, and renovate, or should an individual consider selling and finding a better one? And perhaps that one needs a makeover or some cosmetic updates. What's your thoughts on that?
That's an excellent question. And, you know, there are a lot of different scenarios you have to consider. You know, Kathy touched on it, your lifestyle, the size of the home. So there are a lot of considerations in making that decision. I will say this, in a perfect world, I'm sure people would love to stay first. I mean, if you're in a community, you like where you are, maybe you've been there a while, you know, staying where you are probably makes a lot of sense if you can make it work. But there are many situations where you just can't. And sometimes there's a little anxiety for people as well. You know, I have a lot of needs, you know, as far as my church is in this location, or I have family and friends that are near here. Could I really find what I'm looking for? And sometimes people will go out and look at a couple of homes and get a little discouraged and feel like maybe the home they want really isn't there. It does take a little bit of patience if you are looking to stay in a specific area. But I will say, if the home you're in if you can't make it work, I can tell you after all the years I've done this, I've never failed to not find a client a house as long as I have enough time and a reasonable amount of money to work with.
Excellent point. I'm actually going to segue. I'm just going to jump into one more question for a couple of the other panelists. But Rob, I'm going to show a couple of case studies to our guests here today, our webinar guests that express that. And boy, you've knocked it out of the park on so many occasions with that very statement that you can find it, provided we have the time and of course the financial resources for it. I just want to ask real quickly, Tanya and Laura, just a little banter on this, if I may ask. I'm not seeing Tanya's video for some reason. Tanya, maybe just check your video. It looks like you've actually bumped off, so I'm just going to go right to Laura.
Sounds good.
Just going to ask the question in terms of qualifying. You know, some people might think as they age, there might be a challenge if they sold their current home and Rob found them a new home. What might happen on the qualifying side? Does that affect them?
No, I mean, everybody's individual, and you have to understand most people that are retiring or seniors have funds in their account that they can actually draw on that they may not be drawing on. We can actually take a look at a client individually and assess them based on their overall profile. So it's not a cut and paste answer. We look at everybody and make sure that we can find resources to help them service the debt. We also have different products. We have an operating line, which is interest-only payments, which is way more affordable for seniors that want to just remain in their home. Gotcha. So there's solutions for everything. And what I want to really emphasize is everybody's individual, and we want to help people. So we will look at trying to get them into a home using everything we can, and using their current OAS pension. I mean, it's equity too. It's equity lending to a degree. They're not going to need a full mortgage like you would if you were buying a home for retrofitting or for a new purchase. They Gotcha. Still would have equity they can take over.
But thank you for that, Laura, from Bank of Montreal. I just want to jump into some of the case studies that reference that very statement Rob made, that if you give him the time, he can find it. So this particular case study, I'm just going to run through them real quickly. This is a Brentwood bungalow up on the hill, mountain view, COP. It was just amazing. It took Rob almost 3 years to find this home. But I will tell you, if you click the next slide, this home went from a very, very basic far left-hand corner was the before. The after, the client did not want to change it dramatically, but they wanted it completely accessible. So this is a bungalow. We have a lift opportunity in the garage, so a platform lift. All the hallways, if you click to the next slide, all the hallways were 45 inches, doorways were 36. The shower is curbless. All these things were done, but I can tell you this client is so tickled. We had an open house in this home, and they were just absolutely delighted with Rob's find. So thank you, Rob, for that. And there's case study number one. Case study number two, I'm just going to have you jump the slide there. This was another case study where Rob knocked it out of the park, where we had a client that had a current beautifully maintained home in the southern quadrant of the city and wondered, should they love it or list it, renovate or relocate? So Rob came in, appraised their current home, saw the condition of the home, working with myself, and we just suggested to the client, this home is in pristine condition. You should get top dollar. Why spend your money renovating this current home? Let's find you your downsized home. And that's exactly what we did. Rob listed it. He sold it for top dollar, found them the condo. We renovated the condo to their liking. And this was just a win-win across the board. So again, that one was quicker. That was 3 months. Rob found this condo. Not 3 years this time.
Not 3 years.
So anyway, those are a couple of quick case studies that we talked about. I'm just going to jump to the next slide here and jump right into the finance component. But just before we do, Rob, your website is viewcalgaryareahomes.com. Maybe anybody that wants to check Rob out and his listings, viewcalgaryareahomes.com is his website.
All the listings in Calgary are on that website, just so you know, every one of them.
Fantastic. Awesome. And so those are a couple of case studies of when it doesn't work to renovate your current home. The case study with the bungalow, these folks had a 2-story home, did not want to be in a 2-story for their aging requirements. So, hey, on the other side of the coin, I've got an 88-year-old client right now putting an elevator in a 3-stop elevator in a 2-story home. So it depends, like Laura said, on the individual. We're here to serve the needs of that individual. So let's jump right into our next group of panelists. I'm so excited to hear from these next folks, each of them speaking from a different point of view or perspective. For some of you, the next segment might dispel some myths for you. For others, these panelists may show you finance options that your banker may or may not talk about. But I just want to introduce these folks one more time. We have Tanya at Axoim Mortgage, Laura from BMO, and Norm from Norm Toy Financial. Welcome to all of you this morning.
Hello.
Thank you.
Good morning.
Oh, thank you for having us.
Awesome. Well, let's jump right into our first panelist. I just want to start with Tanya, who's a broker with Axoim Mortgage. Tanya has a myriad of finance options, but today she's going to focus on the myths surrounding reverse mortgages. I know I certainly had some preconceived notions a number of months ago, Tanya. So there's a lot of myths out there, especially on the US side of this industry. But let's start with a few questions that hopefully will help our webinar guests understand the myths and the opportunities surrounding the equity in their own homes. I just want to stress that today we're going to talk about leveraging the equity in your current home. So Tanya, starting with that, what is a reverse mortgage and how does this differ from a traditional mortgage?
A reverse mortgage allows you to pull money from the equity in your home without having to sell or make a payment. To be eligible, you must be a Canadian resident and own your own property and be a minimum of 55 years old. You can access up to 55% of the value of your home, and the funds are tax-free. There are approximately 9 million people in Canada over the age of 65 years old, and 20% of these people are carrying a mortgage on their home, which is being serviced by Canadian pension plan, old age security, and a possible depleting savings account. The attitudes of accessing the equity is changing rapidly for these people and evolving as people are realizing that that the other alternatives may be more costly than a reverse mortgage. A reverse mortgage differs from a home equity line of credit or a traditional mortgage, as you don't have to qualify for this type of a loan, and payments are not required, and you accrue interest only on the funds that are being used. The balance of the payment is made upon selling the home, so the last occupant in the home, or upon death. There is also a no negative equity guarantee, so you will never owe more than the fair market value of your home. Some people worry that at the end of the life of their mortgage, the bank will own their home, but the maximum equity that you're tapping into is 55%, so you still have 45% of the equity left in your home, and hopefully the value of your home will grow over time. Statistics showed in Canada that 99% of clients who did take out a reverse mortgage had equity left in their home at the end of their term.
Yeah, that's some great insight. I know I was just surprised in a good way when we first talked about this quite a while ago, that the fact that these funds are not taxable, number one, and you're only paying interest on what you take. So even if you took a reverse mortgage, say for $100,000, you're not paying interest immediately like you would on some of the other products out there. You're just, as you withdraw from that $100,000 number, you're paying interest on that drawdown. So yeah, what a great insight, and hopefully dispel some myths. Tax-free, what's not to like about that? And no qualifying, right? So,
right. Yeah.
Fantastic. So maybe give us some examples, Tanya, of what are older Canadians using these funds for? Maybe I think there's some myths out there that I can only use these for a home renovation. Though from my side of the coin, I say, yes, thank you. But what else would you use those funds for?
Well, Canadians are living longer, and many financial plans only calculate to around the age of 85, but people are living to be 100 plus. So 91% of the people in Canada, they did a survey, they don't want to move from their homes. They want to stay in their community and their neighborhood. So a lot of them, they don't want to downsize because it can be quite expensive. So they take the equity through reverse mortgage, and they use the funds for unexpected health costs, healthcare, cleaning, cooking meals, medicine. And many parents and grandparents did not anticipate financially supporting their children, especially with COVID-19. I've seen many parents giving their children a living inheritance, and they can see how their money is spent, and many use it to help their kids with tuition, or possibly to buy their first home or a rental property where they can live off of the rental income. And travel and fun is a big thing. We're not traveling right now per se, but a lot of them have worked their whole lives, and now they just want to go on that cruise, or finally go where they've always wanted to travel and just enjoy life. And lastly, a popular one would be the home renovation, and to retrofit their homes. I just did a reverse mortgage for a woman in her 70s with 2 hip replacements, 2 knee surgeries, shoulder issues. She was walking with a walker, and she ended up putting lifts throughout her home and ramps. And then she also remodeled her bathroom to install a walk-in shower, and she took her bathtub out. So it was really nice that I could help her retrofit basically her whole home.
Awesome. Yeah, I mean those are some really good insights, Tanya. I mean, obviously, COVID has certainly threw a lot of us into a different world, so to speak. And I just saw you reference or heard you reference extracting. I like that idea of a living inheritance, so they can see how their inheritance is being spent, and that could be, like you said, investing in a education or mortgage, or helping them in their first purchase. So that's a really neat piece that I maybe hadn't thought of. but thank you for that. And so moving to kind of my last question, how would a person go about qualifying for reverse mortgage, and how difficult is that? So just want to make sure we're on the right slide here, Tanya. Is that the correct slide? I think it's the next slide maybe we're looking for.
Yeah, I think this is, well, yeah, this was the one for the previous,
yes,
where you could use the funds for.
Sure. Is there another slide perhaps we can see? Next slide, please. I guess that's the
kind of it. So yeah, we're just going to talk about the qualification, how easy it is, and
gotcha.
This would be for the last one, what they could use the funds for.
Fantastic. Yeah, go ahead and let us know how difficult or how easy is qualifying for reverse mortgage.
So it's a very simple process. As I would take an application with the clients, and I always suggest that they speak with their accountant and financial planner so they can go speak with Norm and see if there's other options for them, and their accountants as well. And I will run a quote for them just to see what the maximum loan they would qualify for would be. So it's based on your age, location of the property, and the value of the home. And the home value has to have a minimum value of $150,000. And I'll also take a look at their credit situation, just to make sure that they're up to date with their property taxes, and they have fire insurance on their home. And we will pay out all debt secured against their property. An appraisal is also required. And I also tell them to always get independent legal advice. And one of the main lenders that I deal with is Home Equity Bank, and they are a Schedule I bank, and they've been in this industry for 30 years. So you've probably seen their commercials with the chip reverse.
Yes, they're hilarious.
Yeah. So that's pretty much it. So.
Okay. So yeah, I'm assuming it's a one-stop shop. So they can call you, you do all the heavy lifting, you'll tell them what they need to achieve, and you can arrange the appraisal and all of that as well from your end.
Yeah, it's a pretty seamless process.
Yeah, fantastic. And you've got a really cool, I think it's an app or a pre-qualifying kind of tool on the Home Equity Bank website. That's really cool. You can quickly determine, I know I did it just for fun, just to see, okay, what could I qualify for? It's pretty cool and pretty quick. Yeah. So thank you for that, Tanya. Really appreciate that. And for all of you that are joining us here today on this webinar, www.tanya.axiomortgage.ca is Tanya's website. Do visit her, reach out to her. I mean, there's no cost, no obligation to check with her on some of your options. Obviously, we're going to hear now from Laura over at BMO, and then Norm from Norm Financial, and then some of the other products available. But thank you, Tanya. Appreciate
Thank you very much, Paul.
Absolutely. I'm going to jump right over to Laura over at the Bank of Montreal. And Laura, you and I have known each other for a lot of years, and I consider it an honor to have you on this webinar. You've got so much knowledge. You've been part of BMO for so many years, 3 decades plus, and it's just awesome. So thank you for joining us. And I know you kind of collaborated with Norm Toy Financial. You guys are working together on some things here today. But would you mind shedding some light for us, again, addressing the equity in our listeners' homes? So assessing that kind of context, but more from a creative and a different angle. Norm and Laura, Laura, start with helping me. Are there age restrictions to giving someone a mortgage?
Absolutely not. Nope, there's no age restrictions. We have no idea how long clients are going to live. We don't try to predict that.
That's true. So you don't have a crystal ball, hey?
Not at all. I wish I did. I'd be a lot richer.
There you go. So I mean, that's a myth, right? Because I have always thought there was a restriction. Like, I don't know, I thought it was probably 65, 70. And you just dispelled a myth today. So thank you for that. So segueing over to my next question then, does the amortization have to line up with life expectancy? So if I'm 75 and I've got a life expectancy of 85, 90, how does that line up with amortization?
Absolutely no correlation at all. We don't look at amortization or trying to predict, again, how long somebody's going to live. Remember, just like Tanya said, they're going to have built up equity. So it doesn't really matter to us how long the amortization is. There's no strict rules at all. And I think you're asking a question that a lot of people wonder about. So I'm glad you asked that. But there is no restrictions. We've just finished doing a mortgage for a 91-year-old person. So
Wow.
yeah, so we always are here to help.
I got a goosebump moment there. I just love dispelling myths because, Laura, you and I've talked about this before, but there's so many seniors and those aging gracefully in their home that have significant equity built up, and they're just maybe would rather they don't touch their investments or whatever, and this equity is a tool they could use so wonderfully. And just to know that you just qualified somebody at 91 years old just dispelled a massive myth again for me and hopefully our listeners. So thank you. Wow, those are encouraging things, right? I mean, like you said, Tanya, there's the people are living longer. Octarians are fairly normal nowadays, and this is just a great solution. So just segueing into Laura into my next question. This is kind of it's not an item that a lot of people would know about, I don't think. Maybe they do. Maybe I'm being a little bit presumptuous. But what is a payout annuity? That's kind of a product that I wasn't aware of just a few months ago.
Well, I'm going to let Norm speak to the payout annuity, but I'm going to tell you how we partner with Norm. So let me start off with telling a story that we know so very well as bankers. And of course, the ultimate goal for most of the generation of my parents was to pay off their mortgage and then have a title burning party. I mean, I remember actually at the bank, we would send fake champagne when they paid off their mortgage. It was always fake, but it was a way of celebrating that, wow, you've paid off your mortgage. And now, you know what, now we're seeing, like Tanya said, people are living a lot longer. We just actually lost our grandmother, great-grandmother, at 100 years plus 1 month on Monday. So that's a long lifespan. And so having all the burden of prescription drugs, the need to be driven for groceries, when you hit a certain age, you may lose your license, and so you're dependent on your children. You need help with household items. Or let's say, I'm actually thinking when I get older, I'm going to hire a nanny and have somebody come live with me and take care of me. Yep. So that's an expense. So a lot of people have this big, beautiful house. It's all paid off, and they're living not independently. They have to rely on their children. They have to rely on their family for everything and all their needs. So, you know what? The option of going into a senior's home is one thing, but one of the pieces that I wanted to speak to very clearly is with COVID, there was a real change and a shift with seniors. Seniors started looking at homes as, maybe not an option. So I was fortunate enough to listen to a CBC broadcast that actually explained a lot of the issues with senior living. And it shared a lot of contribution from seniors and from caregivers. And although the caregivers care very much, please don't think I'm saying anything else, they actually have trouble doing their job because they're assigned so many seniors, they can't get to them. And so this choice on this broadcast, it was really, really clear that a lot of people don't want to go into a senior's home. In fact, there was one caller that called in and said she would kill herself before she goes into a senior home.
Wow.
So we're seeing a lot of different shift, and public versus private, is it all profit? So we really are seeing a shift with people saying, you know what, I want to stay home. And so how can we help them? Yeah. So one of the best things is to help them understand what they can do, and chip mortgage is one, but we also do a partnership. We would arrange a meeting with the client and their family. We always include the family because it's important that the decisions are well known and protected. Then we would refer to our partner at Pinnacle Renovations, of course, Paul, for you to decide what kinds of things they need to do to adjust their home to live senior friendly and independent. And that may be an elevator, that may be a legal suite so that they have somebody that's living there with them to take care of them if something should happen, or to do the snow removal and all that great stuff. But it's really about customizing a renovation for that client and their needs. Then we would refer to, of course, my partner Norm to uncover what they could take out as equity for an investment, an annuity, which he'll explain. The annuity then becomes income for our client to actually service the mortgage that we're taking out equity for the renovation, and we're taking out equity for the annuity. Now they need more money to balance out prescription drugs, driving, having a cab to take you to the doctors, all that kind of stuff gets considered. So it's a partnership of making a house senior friendly by taking equity out, as well as taking equity out for an investment that's earning interest, but is also paying them monthly. So all those incidentals are covered, and we can actually use that to service the mortgage. This is a really great solution for people that, you know, want to do early inheritance. They can also include that, but it's a great solution in that they do make the payments, and the interest is not accruing. It's actually being paid monthly. So this really is a great solution for a lot of people. And with the amount of people that really do not want to go into a senior home, you know, the pandemic has really caused a big shift. This is a great opportunity for us to help clients get exactly what they need. You know, make their house so that it's really comfortable instead of, you know, struggling to go up the stairs. I mean, I love Tanya's story about the woman she helped. That's huge for a lot of people, especially if they're on fixed incomes. They don't know where to turn, and they don't even think of these options. So I was glad today to be invited to talk about it. So it's about a partnership. It's about all of us working together to make sure we come up with the right solutions for clients. And it's about all of our knowledge sharing and all our skills. So I'm really excited about this to help people. Like I said, I'm going to think about doing it myself. So not yet.
We're not old, right? We're aging gracefully.
No,
We're not old.
No, I'm not old.
But thanks for that, Laura. I think those are some great options. And I think, you know, just educating, I think the whole context of this webinar series, this is our number 2 of a 5-part series, but the whole idea was to bring great people like you on board to create, or just to provide objective education information. It's so easy to get salesy, and that's not what this whole thing was about. And I really appreciate the care I'm hearing, even in the tone of voices with Tanya and you. And I know for me, it's literally a goosebump moment every time we can help someone remain in their home. Like you said, Tanya, 9 out of 10 people wish to remain in their own home. So thanks, Laura. I'm going to segue right over to Norm, just in terms of time preservation here. Norm, I'm going to start with a little bit of trivia, because I think some people may have heard of that name. It's not a common name, but wonder if anybody knows of any broadcaster on a Calgary radio station that would be last name Toy. Well, if you said Adam Toy, you would be correct. Adam is Norm's son. He's at Global, and you may have heard Adam on various broadcasts. I quite like Adam's broadcasts. So Norm, you must be proud as a father. I know you've got some great kids, as we all kind of brag about our kids, but segueing kind of right into today's topic. Thanks for joining us, Norm. I know you're a busy guy, but thank you.
My pleasure, Paul. Thanks for having me on. Yeah, we're quite proud of Adam. I usually watch him after work on the 6 o'clock news on I can't remember what channel it's on, but the Global channel.
Right.
So,
That's awesome.
That's great. But perhaps we can go to the first slide.
I don't know if this is kind of a tag team between you and Laura, but how would our listeners qualify for a line of credit? You know, in terms of retirement income, or is that something you want to leave for now and just jump right into the safety of an annuity? Yeah,
the qualifications, you know, the listeners should probably talk to Laura or Tanya as far as qualifications for the credit. I'll just cover it in the interest of time. I'll just cover annuities. Basically, as Laura said, annuity is an income for life, or for a specified period of time, for 10 years, 20 years, 30 years. And guaranteed income, you don't have to worry about things like markets going down and what interest rates you're going to get, Tanya, on your savings account, all these things. So a guaranteed income for life, there have been many retirement studies done, and we study those as well, because what the majority of the people say in those retirement studies is what makes a happy retirement. And I think that's important after someone has worked 40 years, 45 years, to have a happy retirement. And basically what these retirees are saying is that a happy retirement includes a great family life, also with friends, okay? And it also includes fixed, guaranteed income for life. So what that will do for somebody is give them a peace of mind. If you have the guaranteed income, for instance, as Laura was saying, we see people as well who are house rich and cash poor, especially from Vancouver, where I have part of my practice. So what that means is if you have guaranteed income for life, you feel secure, okay, and you are more relaxed and generally happier. So as Laura was saying, if you have a situation where you are house rich and perhaps not as much savings, or you do not want to use your own cash, especially in this time of low interest rates, 2% or less on a mortgage today, I think, in my opinion, coming from the highest point, which is a 16, 18% mortgage in the early 80s, late 70s, that's a real plus. So as you were saying, Tanya, a financial advisor, a planner has more tools in the toolbox. I'm just going to cover annuities today. But there are many ways to, quite a few ways to have and use of what you've built up and have that income. So one of the things that the retirement studies have shown is, okay, what's more important to people in their retirement? Is it the asset? Is it the savings account, Tanya? Okay, is it their investments? No, it's their income. So retirement to retirees is about income, and this will fix it, okay, or can fix it. So I'm just going to whip through this, some of the key features of an annuity, and the few minutes that we have today will not do justice to it. So normally, as you were saying, Laura, what we do is we sit down with a client, or we meet with a client on Zoom, and we get a lot of information, and there are a lot of uses for annuities, but a lot of times it's in conjunction with other tools in the toolbox, such as a mortgage or a line of credit. So it's simple, okay? Money is borrowed from your house, okay? It's put into an annuity, and you have fixed income you can use to pay the payments on the mortgage, especially at the low rates today, or you can use it for many other things that you had mentioned, Tanya. Estate planning, an annuity is outside of the probate process, okay? So any money that's left in the annuity can be left to your heirs without having to wait. When my mother passed away, the estate took almost 2 years, and it was not that difficult. So the rest of these diversification asset classes are important, and especially retirement income streams, I would say. Creditor protected, okay. If I get sued tomorrow and it hasn't happened yet, thank God for that, Paul, they can take everything I have, okay, but they cannot take an annuity, and they cannot take your life insurance policies, okay, if it's done properly. Okay, so one of the last points we wanted to cover was the tax advantages of annuities. So Tanya, if you start taking money out of your savings account, let's say it's in a LIRA, which is the successor to an RRSP, or somewhere else, if it's in a non-registered account, guess what? You do withdrawals, what happens? It's taxable. Okay, so this schedule, and we do a lot of business with BMO, and this is the insurance division. They're probably one of the strongest in Canada. So if we look at this is a tax schedule. On the top it says guaranteed periodic income, and that's what it is. So the client is age 75. Now I just picked that out of a hat, Paul. No rhyme or reason to that. Okay. So, and I also assume that this client was a little short on income, therefore I picked a 25% tax bracket. So if you look at this, that person would get $502 every month for the rest of their life. And if you look at the column on the right, okay, how much tax are they paying on a $6,022 withdrawal? $111 a year.
Gotcha.
Okay. So that's pretty attractive, especially from a financial advisor's point of view.
Right. Absolutely. So I want to segue back to maybe just in terms of interest of time. There's so much there, and I hope I summarized this. I just did this with a client just this last week, Norm. I know you laugh at my simplicity. You're a financial planner, you're drilling down to specifics, but I just said, listen, you're taking the equity out of your home via a mortgage, investing that into a payout annuity. The payout annuity is paying back the interest and more, potentially at today's interest rates. And, you know, it's somewhat of a wash in terms of the cost. And you haven't lost your principal. Your principal is still in that payout annuity. So it's just a great product. I was not familiar with this product a number of months ago, but thanks for that. And Norm, could you finish with just, is there anything specifically involved in getting an annuity? Is it a financial planner only, or how would one go about getting an annuity?
That's a really good question, Paul. I would say that you've summed it up really well. And with an addition to being Laura's point that you want to do that in addition to borrowing money to do the renovation itself, if that's required.
Right.
So the other thing I would mention to you, Paul, is that, yeah, that was a great job. The other thing I would mention is if you're ever thinking of getting out of the renovation business, or when you retire, we have an opening.
Yeah, I'd be way too simple, Norm.
So how does a person get an annuity? Can they do it themselves? Yes, they can. That's not advisable. There's like a house renovation. Okay, unless you're very experienced at that, you have the knowledge. Once you formulate the annuity and put the terms in place, it's usually not changeable. Okay. So that's where the advice of an advisor, just like the advice of a mortgage specialist like Laura and Tanya, really important, I feel.
Yeah, well, that's a really good point. I mean, there's, as we all know, the DIY world is, yeah, there's people that are quite savvy in that world. However, I didn't realize that once you create your conditions on that payout annuity, they're not changeable. So super critical to get the right advice at the front end to make sure you're not disappointed at the back end of that annuity.
Yeah, there's a whole process, Paul, because there are so many other tools in the toolbox for us. We sit down with the client and see what is best for their situation.
Absolutely. Well, we're gonna wrap up with that. I know that each of you could, as me, when you get me started on renovations, I can talk for hours. And you know, you guys have been so helpful today. If you could just unmute yourselves, I'd just like to finish off by thanking Laura and Tanya and Norm for joining us today. I feel like I'm sitting around the table with the masters at their craft. So thank you, Tanya. Thank you, Laura.
Thank you. Thanks for having me.
Thank you, Paul.
Absolutely. And if I could just wrap up with the websites again, it's Tanya. Let me just scroll back up to make sure I get this right. It's www.tanya.axiommortgage.ca for Tanya's side, and then for Norm and Laura, it's www.normtoydfinancial.com, and of course bmo.com. But these folks are masters at their craft. Laura, I think I've known you as long as I've probably known Norm, or longer.
Yeah.
I have a lot of respect for you folks. Tanya, we've known each other probably a couple of years now, I guess, and just really respect your world and how you help our aging demographic and others. But thank you so much for taking the time with us today. I really hope our guests received a lot from this. Thank you. And we're going to segue over to our next group. Thank you, guys. Have a great day.
Thank you. Have a nice day.
Thank you. We'll segue over to our renovator. So let's jump right into that. Kathy, being in the architectural world, just want to wrap this webinar up today and chat with Kathy from Phase One Design, as I actually feel today is a wonderful milestone from our first two webinars. So Kathy, you're with us on the first one.
Yeah.
And in our last webinar, we covered the viability of your current home. So identifying, can my home be renovated to make it my forever home? Mm-hmm. On today's webinar, we learned from Rob on, if you have patience, sometimes you need it, sometimes you don't, but finding that perfect home, if you do need to relocate and hunt for that perfect home, if your current one is not viable, you have that option. And then today we heard about all the finance options that perhaps some of you haven't thought of before, but things like you now realize in summary your viability of your current home. Perhaps you need to hunt for the next one. The budget and finances are options. So now you begin the next step, which is the design part of the design build model that I want to ask Kathy about. So Kathy, you've been at this a lot of years, and you've got an amazing portfolio all across Western Canada. I'd just like to jump in and just ask you, why is it important to begin with the clear budget understanding, to Laura's point earlier, at the onset of your design, be it a reno or a new build?
Right. Great question, Paul. So first of all, thanks for having me here today. I always like to say the key to successful design for any project, regardless of whether or not you're renovating or building new, is not only just to get the design that you love, but also to make sure it's on budget, obviously, right? Like nobody ever wants to be over budget. And so how do you do this? So like you said, Paul, one of the most important things is to define a budget at the very beginning of the project and before you start any design whatsoever. Because then what happens is if you define this budget at the very beginning, then all the way throughout design, this initial budget range will be used to drive design decisions. And when you get to the end of the design process, then you know that you have the design that you love on one end, and then also that it fits within that predetermined budget parameter that you've defined. So I know that sounds like it's really, really easy, but the reality is, it's actually more difficult than it sounds. So I'll just kind of speak to that a little bit. I actually do a lot of presentations about this, and actually even on my YouTube channel, I talk about this. But everyone's like, okay, well, Callie, that's great. Like, obviously I need a budget, but how do you even get an initial budget? Because a lot of people find themselves in this weird in-between space where they say, well, I think this is what I want to do with my home, but then I don't really know like what the budget is. Do I spend money on design? And like, just kind of going around in circles. So I'm just going to talk about how you actually get an initial budget. And if you're feeling that way today, don't worry, it's completely normal. So I'm going to give some high level points. I actually don't have slides for these 4 super high level points. If you want me to summarize them, feel free to shoot me an email and I'm happy to reiterate these. So first and foremost, the first thing you can do, which is actually free, and you can literally do this today, and it's the most fun part, is to make a wish list. So what that really entails is you sit down, you get a really clear idea of what you want in your home, and you literally just write it all down. So paper, pen, on your laptop, doesn't matter, just like capture it somewhere. Just start making a list, and that also includes gathering photos of spaces that you like. So again, it doesn't matter how you do it, whether or not you want to go online or drive around your neighborhood, take photos, doesn't really matter, just as long as it's all somewhere. It doesn't have to be organized, and this is the only point in the process where I'll say, don't worry about the budget. Don't worry, we're going to talk about that later. But just gather your wish list. So that's the first thing. The second thing is to take that wish list and then share it with a designer and or builder that understands budgets. Because I will say, I hate to say it, but like not all designers and builders really understand budgets at this beginning point, like you would think so, but not really. So just making sure that whoever you're sharing this wish list with does understand the budgeting process. The reason why you want to do that is a professional designer and builder, like Paul, you and I do these consultations all the time. What we would do is go into a consultation and very quickly be able to talk with you and assess how big or small the project needs to be in order to get everything that you want. So for example, if you're doing a renovation, does your existing house even have enough square footage, or are we looking at doing an addition? If you're building a new home, how big does a home need to be, and what style of home does it need to be? So that's the second step, is sitting down and sharing your wish list with a professional. The third step is, and this will segue in that same conversation, is the professional designer and builder will, based on that conversation, be able to come to you and say, okay, now based on all these things that you've told me, here's what we need to do with your project, and here's how much we think it's going to cost. So setting a realistic expectation. Nobody is like a magic genie where we can say exactly to the dollar, here's how much it's going to cost. But what you want to get is what I call a low-high budget range. So that budget range is going to, kind of give you an idea of how much that particular renovation and or new build will cost. And then the last and most important step in getting this budget at the very beginning is to go away from that meeting and making sure that you're actually comfortable with the budget. So don't start any design until like you go through this process. If for whatever reason you're not comfortable with that budget, then what needs to happen is one of two things. Or actually, I should say one of three things. Number one, you have to make your budget go up. You have to make your scope go down is number two, or you walk away from the project. And nobody likes to think about that, but it's better to do that at the beginning and find yourself in a good place rather than finding yourself, over budget at the end. And I will say, at the risk of putting a plug in for Paul and I do these consultations all the time. It sounds really complicated, especially because I don't have slides to support it, but usually this happens literally in like a 1 hour consultation that Paul and I will do. So for any of the listeners and viewers today, or even when this gets posted on YouTube, feel free to reach out. Like, we're here to help, and we actually don't charge for this first consultation. So it's a good way to get there. And actually, I guess just segueing back to Paul, I talked a lot about the design and the budget, but let's just kind of like address the elephant in the room, because everyone hears the horror stories about, the like nightmare contractor that comes and is completely over budget and, over time frame and like all these nightmares. I just want to say, Paul, you have a really unique way of kind of addressing that. So maybe you can speak to that a little bit in terms of like on the construction side of things, staying on budget.
Yeah, thanks, Kathy. It is, I really appreciate your honesty in those 4 steps, because I think one of the most disheartening things is to get through a design. And we're going to talk about a fun piece as we wrap up here today. But you don't get fun at the end of the project with an inflated budget and timeline overruns. In fact, CMHC, Laura will know this, but CMHC, I think the top 3 angst points for people starting a rental is cost overruns, budget overruns, and timeline overages. So those 3 things are, I call it the elephants in the room: start date, completion date, and cost. So about 14, 15 years ago, I trademarked a 3-way guarantee called SEC 3-way guarantee. So start date, completion date, and cost, we guarantee it and have guaranteed it for all these years. But it doesn't happen magically. Rob, you've been with us when we walk through a potential home that a client's looking for. And we talk about budgets openly. If we can't have open dialogue, some people think that if they hold their budget close to their chest and we don't discuss it, that somehow a builder is going to come up with a magical lowball number that's going to work. It never works. In fact, most lawsuits come as a result of that. So we just decided early on we would address that. And so, Kathy, that we guarantee our start date, completion date, and cost. And the only way we do that is having very, very honest conversations at the onset. And we do that with you. Mm-hmm. Yeah, and of course the client. So yeah. I want to segue back to you. This is kind of a wrap-up question. It's kind of the fun part of what we do, and we call it the grand reveal. So it could be the design piece. So Laura mentioned years ago she saw a 3D design that we encapsulated, and the fun of that. Maybe just talk a little bit about the grand reveal as we refer to it. Then I'm going to show a couple of case studies and we'll wrap up here today.
Okay, sounds great. So I think everybody's familiar with like floor plans. Everyone's seen floor plans. I call it kind of like the old way of doing a grand reveal. And the reason why I say that is
this is Kathy's there we go. Get back to Kathy's. There we go. Yep.
Next slide, please. Next slide. Yeah. Okay. So everyone's familiar with floor plans. You've all seen floor plans at some point in the game, but here's the reality. Like, to be honest, nobody really knows how to read a floor plan. It's very complicated. Nobody likes to admit it, but I'm just going to put it out there. I just say it how it is, right? That's how I am. So, and the reason I'm bringing up the slide is this is kind of what I call the old way of doing a grand reveal. There's like the new way, which is probably what you saw, Laura, in Paul's office. And if you want to flip a couple slides later, because nobody can read floor plans, there's a ton of really cool things that we can do with technology these days. I'll just speak really quickly and high level on this. So one of the things that we always like to do is 3D floor plans. So, just to be able to see what this space actually looks like in 3D. This is a static image. One of the cool things that you do throughout design in the grand reveal is we actually send a link after the meeting, and we actually spin around this model in 3D in the meeting, and then we'll send you a link after the meeting. So like in your free time, you can kind of spin it around and do all sorts of hide things and look at your new house in different angles. which is pretty cool. And if you go to the next slide, I think we've all seen like, you know, the black and white architectural exterior renderings. To be honest, nobody really understands what your house looks like off of that. So we've, with technology, it's really allowed us to go, you know, into photorealistic renderings. We do a rendering like this for every project that we do. And again, this is a static image, but typically in the meeting, like we'll spin it around and make sure like your house looks good from all angles and making sure that the landscaping works with it. So another really cool thing. And if we go to the next slide as well, this is an example of, there's often times where we don't maybe do like a brand new house, like maybe it's just colors and materials. There's a lot you can do with just colors and material. So what we can do is just take like a photo of your home, do a photo modify the photo and actually show what your house will look like after colors and material. And again, this one only has one option, but actually with this specific client, this was a Pinnacle job as well. We did together with Paul. We showed like a lot of different options and you can just kind of play with it. And then that way, you know, you're getting the right color and materials. And then I think there's one more slide after this. Yeah, and then last but not least, I always believe that photos are very powerful. So, you know, this is more the aesthetics of the home with regards to like the materials and stuff like that. But we always like to put together interior mood boards where we say, okay, like at the upper left-hand corner one, that wet room, that's actually a really good example of a project we're working on right now where, you know, we're actually working with a client that's wheelchair bound full-time. And we had this really cool idea to say, oh, hey, you know, we're going to do this wet room and trying to describe it. But a picture is worth 1,000 words. That's very cliche, but very true. So this photo was able to illustrate, okay, this is actually how it's going to look beautiful, sophisticated, and very like spa-like. So, you know, that picture just alone is very powerful. So these are just 3 images or pages, I should say, out of this. But typically with a project, we have like 50 to 100 images where we say, here's the inspiration for the direction of the design. And then from there, we kind of tailor it exactly to what the client likes. So yeah, fun stuff.
Yeah, those concept boards or the mood boards are so powerful.
Yeah.
I do recall this project that you just mentioned.
Yeah.
Yeah, I mean, I'm a builder and I saw the floor plan and I thought I understood it. And then I saw the mood board and it just came alive. So even for those in the industry, we need this type of inspiration. So thank you, Kathy. That was awesome. We're just going to wrap up here just on that whole idea of the grand reveal. I wanted to tell you, much like Laura's example, this particular lady, I remember it so vividly. This is a number of years ago. We were in our boardroom. We had the 3D in our big screen. We did the reveal, brought the 3D up, and she came out of her chair and ran to the screen and said, "That's the home I want. That's exactly what I want." Anyway, that was the home. So you can see the before picture, the after. That's Gallery 20. If you're interested, go on our website and you'll see that. But do visit Kathy's website too, phase1design.ca. She's got an enormous amount of galleries and a fabulous YouTube channel as well to help you navigate this whole process. But that grand reveal, so this was before, I'll get to the next slide. This is another kind of a grand reveal in reverse. So this is now project done. And I want to kind of tell you the story there. So we have what we call a turnover day. And the before picture you can see at the left, the after picture on the right. And in this particular case, the client was so excited, flip the next slide, please, that she said, "I want to tell everyone right now what I'm feeling." So that video is on our website, so you can check this customer review out. She right on the spot, we just turned the home over. She was so excited. I think that's what we all live for. I think, you know, everybody, Norm, you talked about the family. Tanya, you talked about ways we can leverage the mortgage. Rob, you talked about community. Laura, you talked about various items too, as to what you can use those funds for. I think at the end of the day, everybody on this webinar today is all about family, all about ensuring that our customer gets exactly what they want at the end of the day. And truth be known, that's the whole point of this webinar. In summary here today, we really just simply wanted to give you an opportunity to hear from the professionals. I know this is high level. We could spend hours and hours on this topic, but we have to sum up. We're already 15 minutes over, but I just wanted to give you guys all your listeners just a really good snapshot on the finance side. So the reveal side's fun. That's what we all live for. You know, we don't all get to come to these reveals, but I know some of you on the finance side, sometimes you're in the background and making it all happen. But without you, we couldn't do what we do. Rob, we couldn't do what we do without you finding the perfect home. Kathy, you do the design, we couldn't do that, do what we do without your design. So everybody, as somebody said, I think it was Laura, it's a team effort. Everybody from top to bottom has to be involved. So in summary, I'm just going to wrap up. Again, this is the second part of a 5-part series. Do visit us next Wednesday. We've got the next 3 Wednesdays left as we talk about the gorgeous side of renovations. Does my accessible home have to be medicinal or institutional looking? And we're going to cover that topic next week. Boy, oh boy, it's you're going to see some case studies where we show you no, the absolute opposite is true. So thank you for your interest in joining us today. Don't forget to ask for that free ebook at the end of our stay here today. I think we'll have our broadcaster bring that up for you for that link. And our next webinar, as I mentioned, we'll be back with value to peak. It'll be an OT, it'll be one-on-one mobility, and the automation side with Mike at Digital Lifestyles. So do join us next Wednesday. On behalf of Tanya at Axoim Mortgage, Laura at BMO, Norm at Norm Financial, and myself, and of course, Kathy at Phase 1 Design. Thank you for joining us today. All of our contact information websites are in the chat box for you to link, search, research, and we welcome your calls or emails. Have a great week, and we'll see you next Wednesday. But if anybody has a question or wave your hand, that's part of our guests here today, we'd be happy to answer that. And if not, we'll just jump right into our next session next week. Any questions before we sign off? All right. No questions at this point. Thank you so much for joining us, everyone. Thank you, panelists. And
Thank you.
Yeah, there's a free ebook for you to download. All of the information, the links and websites of our panels will be on our chat box. So thank you, Laura, Norm, Kathy, Rob, Tanya. Thank you.
Thank you, Paul. Thanks, everybody. Have a great day.
Thanks, everyone. Thanks for having me.
Bye.
Bye-bye.